Welcome to Accounting Focus, everyone. My name is Richmond, a young chartered accountant, and I'll be leading you today's presentation. Okay, so basically, what this channel is about has to do with focusing on standards and solving past standard questions from ICA, ACC, and CIMA to make the understanding more practical. Okay, so in today's episode of Day, we are going to focus on the overview of IFRS 16. I want you to get the practical understanding of IFRS 16 before we even dwell into the principles. Okay, so stay with me and trust me, by the end of the video you appreciate this lecture so much. So now, before we focus on IFRS 16, we talked about property, plant, and equipment. There is something I want you to understand. Okay, I want us to first break down what we call the non-current assets. Now, we talk about non-current assets. Non-current assets are assets owned and controlled by an entity, okay, which has a useful life of more than 1 year, or which can be used by the business for more than 1 year. I hope you are getting it. So if you have an asset and you can use the assets for more than 1 accounting year, then we say that particular asset is non-current asset. But trust me, there are two classes of these non-current assets. One, we have the tangible and we have the intangible. I hope you are getting me. Now, the tangible assets, tangible non-current assets are those that you can touch and feel. Intangible are those that you cannot touch and feel, but they are still properties of the business. Are you with me? Are you with me? Stay with me. Good. Now, when it comes to the intangible is being regulated by a different standard called IAS 38. But when you talk about the tangible, it depends on the purpose for which you are using the non-current assets. Okay. Now, this tangible could be used by the business in generating income for the business, so it can be used in the day-to-day activities of the business. Okay, and we also have another purpose where you could be giving out that particular tangible non-current assets for rental, so that you earn rental income. All right, now if you are using the assets, if you are a business, if you have a business and you have an asset and you use the assets in generating revenue for the business, okay, or you use the assets in the day-to-day running of the business, then that is where we call it PPE, property, plant, and equipment. But then if you are giving it out as rentals to people to use and you are earning rental income, then we call it investment property. Are you getting the breakdown? Are you getting the breakdown of all this whole thing? Good. Now, if it is PPE, so I've given you the breakdown that if it's tangible and you have a business, so you have a business and this asset you are using is tangible, and you are using the assets to generate income for the business, or you are using the assets in the day-to-day activities of the business, then we call it PPE. Now, this PPE is regulated by what we call the IFRS 16. Today's lecture is focused on IFRS 16. So the breakdown is to understand what IFRS 16 actually applies to the property, plant, and equipment. But if it is an investment property, and trust me, when you talk about this investment property, the ones you are giving out for rental, the assets you are giving out for rentals has to do with immovable objects like building. So if it's a building and you are giving it out for rental purposes, then we classify it as investment property. It does not form part of your PPE. So IFRS 16 does not apply to buildings or immovable objects that you are using for rental purposes. Are you mean? So if it is PPE, then we say that you will use what you call IFRS 16. But if it's investment property, then we use what you call IAS 40. Are you appreciating this? Good. So if you understand, so to summarize this, what I'm saying is that IFRS 16, we talked about property, plant, and equipment. The scope of it all is that it gives us the principles on how to account tangible non-current assets. Tangible non-current assets which are used by the business in generating income or for administrative purposes, right? Good. And that is the breakdown or the simplicity of what IFRS 16 basically talks about. Now, for you to also understand IFRS 16, there are certain terms that you must be abreast with, okay? There are certain terms that you must be familiar with. Now, first of all, you realize that when you are talking about the principle, we're talking about cost of an asset, a lot, cost of an asset. Now, I want you to understand these basic terms before we even dwell into the principles, right? Now, when you talk about cost of an asset, it basically has to do with, the considerations paid in exchange for an asset, or in exchange to acquire an asset. Okay? So if you go to the market and then you pay 50,000 to acquire an asset, it means that 50,000 becomes the cost of an asset. Now, let me not forget, or don't forget, that there are some direct attributable costs that is associated with this asset, right? Like, transporting the goods from, the market to your, place of business, they all form part. And we'll look at this more into detail in the next chapter, where we'll talk about the components of cost. Okay, so stay with me. Now, when you talk about residual value has to do with the amount at which you sell the assets after it has completed its useful life. So you bought the asset and you said, oh, this asset will be with me for 5 years. I'm going to use this asset for 5 years, right? Now, after you use this asset for 5 years, you can choose to sell it. So the amount at which you sell that asset becomes the residual value. Some people also call scrap value. So in some other books, you see it as scrap value, all right? They are the same thing. Now, when we talk about fair value, let's take the word on face value, okay? Now, when you say something is fair means there is equality, there is no bias, is that not it? In other books, you might see it as market value, fair value, they are almost the same thing. So what you are saying is that when you go to the market to buy something, okay, to acquire an asset, to buy anything that you want to buy it, are they giving it to you at fair value? So fair value means that there is an efficient market where there is no bias. So the definition for fair value has to do with, okay, it is the amount exchanged between knowledgeable willing parties at an arm's length transaction, right? So you are acquiring that thing at a value that any other person could acquire. There's no bias. There is no, favoritism in there. How we are getting it. So we in some books you see market value. So you go there, you go and buy it at market value, at fair value. So mostly that's it. So that is basically what fair value means. Okay. Now, when you talk about the entity specific value or value in use, from the word value in use, how do you understand it? The value you obtain from the use of an asset. Is that not it? The value you obtain from the use of an asset. So if you acquire an asset and you say that, okay, this asset is going to be with me for 10 good years, we want to make a projection, we want to make an estimate. Okay, if I should continuously use this asset, how much value can this asset create for me? Is that not it? How much value can this asset create for me? So what you do is that we estimate the cash flows, the future cash flows. So we are going to estimate the future cash flows. So we will estimate all of them. So if it is for 10 years, we will say that, okay, year 1, we are going to get this, year 2, we are going to get this cash flow, year 3, we are going to get this cash flow, year 4, we are going to get this cash flow. We will estimate all of them, but then don't forget, time value of money has to come in, right? Because we are estimating, you also have to consider time value of money. So what we do is that we discount these future cash flows that we have estimated, right? And then we present value it. So if we present value all of them, we sum all of them. So we are going to present value all of the future cash flow, each of the future cash flows. We add all of them, and then we are going to get the value the asset will be able to generate for us for continuous use of the business for that 10 years period, right? And then we will know in today's value. I hope you are getting me. So it is simple, very, very simple. I hope you are appreciating it. Next, now when we talk about carrying amount has to do with is the same as what we call net book value. So those of you with accounting background, you realize that initially when you're preparing balance sheets, what you call the statement of financial position, you realize that after you depreciate an asset and then you subtract the depreciation from the cost of the asset, you term it as net book value, right? It's the same thing here, but there has been an upgrade. Now over here, the carrying amount basically has to do with the cost of an asset minus accumulated depreciation minus accumulated impairment loss. So you realize that we've added what we call impairment loss, right? Which is a standard on its own. IFRS 36 is a standard on its own, and we'll look at it more into details going forward. When talking about impairment loss, so if you have an asset, okay, and the carrying amount is more than the recoverable amount, then you get what we call an impairment loss. Okay, so indirectly, if you have an asset and then the amount in the books is more than the recoverable amount, it means that you get a positive figure, right? Then you treat it as an impairment loss. But if it is negative, you don't treat it as impairment loss. There is nothing like impairment gain, okay? And this has to do with prudency concept. So the prudency concept says that as an accountant, you must not anticipate profits, but provide for all possible losses. So we don't anticipate profit. We want to anticipate losses, right? So anything loss, we have to capture it. Okay. So that is why we don't have an impairment game. Okay. So we just focus on impairment loss. Now, this is just a short video to let you appreciate what IFRS 16 is about, let you get the breakdown of the terms under IFRS 16. Now, the next video will talk about the principles, the main principles of what IFRS 16 really covers, right? So trust me, we are going to drop the link. We are going to drop the link for the next video. So make sure you tap on the link below so that it takes you to the next video so that you understand what IFRS 16 basically talks about. So until then, we call it a day here. Now, thank you for staying with me. Thank you for staying with me till the end of the video. Now, if you've not subscribed, kindly hit the subscribe button and then turn on your post notification so that anytime we upload a video, you'll be notified and you always stay consistent with our videos. And then at the same time, I'm also available for, tutorials, one-on-one tutorials. I'm available for, consultancy. So if you think you have any challenge and you like to reach out to me, my email can also be found below. Make sure you stay in touch with me.